Good morning, Greene County. Welcome to the fourth Tuesday in January. Everybody's favorite Tuesday, the Financial Huddle Tuesday, right? Justin's favorite. There we go. I think Justin's just happy he's not up here for a Financial Huddle. He gave us many excellent years of Financial Huddle service. Today, we're not going to go over numbers, but I'd like to talk about some concepts and kind of use the wisdom of the crowd to give us some suggestions and some feedback for a little issue that the budget department would like to take to commission, and then for the commission and the auditor to come up with a practical solution for. So that's kind of my teaser into this. It's quite a bit of information. I'll go fairly quickly, but I think we'll get out of here early. So let's get into it. So what is the budget? And I apologize, I'm used to this big screen being down here as opposed to this format like this. So I might be squinting to read some of the back lines, and I know you'll be squinting to read what's on the front here. But by statute, the budget is something that presents a complete financial plan for the ensuing budget. And it makes sure that all of our expenditures for administration, maintenance are covered, including supplies. And then it also provides for the maintenance of all offices, departments, commissions, courts, and institutions. It takes into account the surpluses and deficits from previous years. And then it also takes into account bond payments and expenditures for capital. Besides that, it also looks at the anticipated income and the means for financing those expenditures. So that's what a budget is by statute. What happens if you go over budget? So this is out of the auditor's chapter, and we apologize for when it was written, but it says, "He shall keep accounts of all appropriations and expenditures made by the governing body of the county," which Cindy does an incredible job of with our Eden system, "and no warrant shall be drawn or obligation incurred without his certification that an unencumbered balance sufficient to pay the same remains in the appropriation account against which such warrant or obligation is to be charged." So technically, if you go over budget, you can't go over budget because that check doesn't get paid. So in order to have something drawn or obligated against an appropriation account, you have to have a balance there. So what we need to understand, our budget book is a complete financial plan. However, some of what we have in there is additional detail. And then some of it beyond what's technically the actual budget. And then what constitutes the appropriation account level within our budget is up to interpretation. Now, I've been here for 10 years, and I can't recall a time when we actually defined what that appropriation account level is in our budget. And so I think it's probably time that we look at it again and we clarify it for all office holders and department heads. And we put together a recommendation for commission, and then commission and the auditor can work together on what is a practical solution for what our level of appropriation budget is. So by state statute, the expenditures estimates should be classified to set forth the data by funds, organization units, character, and objects of expenditures. So 3 things that statute requires us to put the appropriation accounts by. And then units may be subclassified by functions and activities if so directed by the budget officer. So we got 3 required levels, and then if I choose to get picky, we can go a little deeper. And so that's where our flexibility is. So when we look at what this means, on the top line, you can see what statute says: funds, organization units, character, and objects of expenditures. And then down below, we have what our account numbers show. So the first 3 numbers of our account number is fund. So you can look at this and think pretty easily, okay, funds in statute, fund here. We can still define what our appropriation level of funds is. So we don't have to have just Fund 101 be general revenue. If we want to, we can look at it and define for an appropriation level of accounts that Fund 101, Real Property Improvement, Fund 203, maybe even Sheriff's Grants, Fund 241, all comprise general revenue. And the deal is, when I pull out like Fund 203, which is Real Property Improvements, and Fund 241, which is Sheriff's Grants, we have broken those out into separate funds just for the ease of looking at those items and keeping them separate. For state budget authority, we can define it a different way if we so choose. Whether it's practical or not, that's up to, the combined minds of the auditor and commission. So that's the first one. The second part of the account number is functions of government. This is really something that we use in our combined financial statements. It puts forth whether something is safety or parks or general government. It doesn't really apply to what we're looking at here. Now, the next item that we have here is department. So, as you know, commission has multiple departments. The sheriff's office has multiple departments. We got multiple departments everywhere. And when you're looking at this, you're looking, well, we have organizational units, and then our account numbers has departments. When I look at this, I kind of think the organizational units is probably office holders. And so departments would be organizational units that are subclassified by function and activity. So departments would actually be your functions and activities if we choose to take it down to that level. And then when we look at the last part of the account number, the first two digits of that, we call the expense type or category. And so like 51s are salaries and benefits, 52s are contracts, 53s training, travel, et cetera, et cetera. I almost look at expense types or categories as being that character and objects of expenditure. The last 5 digits, though, as a whole, are known as the object code. So your expense code. You'll notice that expense numbers with the same 5 digits are usually the same thing, no matter what department, fund, or office they're in. So that's what we have, and that's what we need to look at and see how we want to interpret how our account numbers match up with funds, organization units, character and objects of expenditure. So the impact of our decision. When we look at this, obviously, the higher we keep things, instead of bringing it down to more detail, the more we can pool available balances within a category to be able to not exceed budget. So we'll be able to have more flexibility in how we approve, in what we're able to approve. And we also will have more flexibility in doing budget adjustments at the end of the year. So last week, I just did a download of where we are with our 2022 expenditures compared to budget, so that we could kind of see how many budget adjustments we could possibly be talking about. And this is only the commission-controlled funds. So when we look at the 2022 numbers and we add in all of the unposteds, all of the encumbrances, we currently have about 1,081 accounts. 444 of those have a negative balance. So if we were to define our appropriation account level at our general ledger account level, then we would be looking at doing 444 budget adjustments for 2022. Not very practical, and I don't think we're really meant to do it like that. So if we take that, and instead of saying we're doing our appropriation accounts by account level, we're going to do it by expense type in each department within each office holder in a fund. So that's just going from accounts to just saying, okay, well, all of our 51s within the jail, within the sheriff in Fund 101. Then we go from having 444 adjustments to only having 113. And so that way, if the jail has two accounts that are 52s or contracts and they're over in one, but they have savings in the other one, all of a sudden we don't have to do a budget adjustment for those. They can take care of each other. To take that a little bit further down, if we take out departments, that extra descriptor that the budget officer is allowed to add to the budget, then we have just expense type within office holder within fund. This is also the level that we did our monitoring at throughout last year for the Great Game Huddles. So if we do that, we drop from needing 113 budget adjustments to 53. Typically, we do about 26 to 30 budget adjustments a year, but that is including not only commission funds, but just a little cleanup on the discretionary funds. In practice, what we've been doing for as long as I've been budget officer is we've only been doing budget adjustments at the fund level, which probably doesn't match up with what we should be doing. So that's 53, and that's kind of where I think we match up with state statute as far as what they're requiring. But to bring it on down, if you look at just departments within office holders and funds, then we go from 53 adjustments to 38. And if you look at just by office holder in fund, then we have 13 adjustments that would be needed across the 9 funds. And by funds, it's just 8. So that's kind of the impact. We're looking for that level of practicality in how we do things, and yet having enough detail in there to where things are separated. So here's my big ask today for the wisdom from the crowd. I'm going to be making a recommendation to commission because the budget officer is supposed to make that recommendation as to whether we do an extra level or not. So when I make that recommendation, I'd like to have your input. So if you please email me your comments or concerns with what we kind of just talked about, I'll consider them when forming my recommendation. And then I will include each of those emails in a packet that I provide the commission, so the commission will have a chance to see directly what your opinion is. Now, of course, what I've been saying, it's going to be the commission's decision, and the commission is going to work with the auditor to make sure that what they come up with is something that's practical and doable. Now, please note, well, that was number 2 there. My goal is to have this defined, and then we'll include it in all future budget books so that there's not any kind of confusion as to, well, you've got me budgeted this at this account level. And it's like, well, actually, the budgeted appropriation account is up here at this level. This is just additional detail for commission to be able to base how they're allocating budgeted funds. But really, your spending is up here limited at this appropriation level. So that way, we'll have some clarity. We'll be able to tie how we budget to how we monitor, and it'll be out there defined to make it easier for you to follow whether you have available funds to purchase something different than what might originally been your budgeted plan. So that takes us to budget adjustments. Because we're talking about budgets here. I keep walking on these boards. There we go. Okay, that's so much better. You ever stand on something and just feel like you have to stay there? It's not fun. Okay, so budget adjustments. The state statute allows us to do budget adjustments a few different ways. So the first statute is any county may amend the annual budget during any fiscal year in which the county receives additional funds. These can be, but they're not limited to, grants, donations, that couldn't have been estimated as coming in when the budget was adopted. Now, here's the kicker. The county shall follow the same procedures as required in 525 through 745, which is known as the budget law, for adoption of the annual budget to amend its budget during a fiscal year. We have never done this since I've been here. We've probably wanted to do it, but we've never done it to the level the state statute's asking, because that would require us having a public presentation of a recommended budget. So the changes from what the current budget is, and then it would require departmental meetings between commission and the departments that feel like they were affected. And then it would require a appropriated budget being made and put on public display for a period of 10 days. And then finally, we would have to publish in a paper of circulation that there is a meeting for the final appropriation change of the budget, and then we would present it and commission would have to adopt it. So it's the whole big, long budget process we do at the end of for every year that you would have to do mid-year if you just wanted to change a budget because you had additional revenues come in that you didn't foresee. We could do it and we can make it a lot smaller, but it's still cumbersome. We never have done it. So that takes us to the next method. The county commission may authorize the transfer within the same fund of any unencumbered appropriation balance or any portion thereof from one spending agency under its jurisdiction to another. So that part right there concerns me. We'd need to get some interpretation, but this action shall be taken only on the recommendation of the budget officer and only during the last 2 months of the fiscal year. So that's generally what we've told people is budget adjustments can't happen until the last 2 months of the fiscal year. And that's where that comes from. But that's when you look at, well, do we have savings in one line that covers savings in another? The interesting part here is it's under commission's savings in a line under commission's jurisdiction to another. So I don't know if state law actually lets us take savings in one of the sheriff's lines to cover an overage in another line in the sheriff's account. We'd have to look at that and see what we can do, and maybe that budget's still considered under commission's jurisdiction, even though it's allocated to the office holder. I just don't know, so it's a concern. But it's just the last 2 months of the fiscal year that we can do that, except that transfers from the emergency fund may be made at any time in the manner herein provided. So what's the emergency fund? The emergency fund, of course, is defined by state statute again. We're required to put at least 3% of gross estimated revenues as an emergency fund for GR. We do that, and it's called contingency. So when we talk about contingency, that's showing up as our emergency fund. At any time during the year, the county commission in counties of class 1 may make transfers from the emergency fund to any other appropriation. So this is how they can do a budget adjustment at any time. There's a little ellipsis there because it talks about other classes of counties, so I just cut that out. But the transfers in all classes shall be made only for unforeseen emergencies and only on unanimous vote of the county commission. So if Rusty wants to be ornery, by God, he can be ornery. And I picked on Rusty because, you know, I see John and I see Bob. Rusty, he's being ornery. So when we look at our contingency accounts, we do have our 3% of revenues, or $2,625,000 in general revenue. We've also placed some contingency accounts in Road and Bridge, $1 million, in 911, $349,915, and in senior services, $300,000. This allows those funds to have a little bit more flexibility also. So when we monitor, while spending above the appropriation account level, a budget adjustment must be made for the spending to occur. This typically happens with a commission-approved use of contingency in the first 10 months of the year. Now, we might go ahead and keep track of, there's availability in this line to cover this line within my budget. Will commission please approve it? We'll temporarily use contingency during the first 10 months, but when month 11 rolls around, let's refund contingency and make that available again. So we can kind of play with that, but technically we're using contingency during those first 10 months. We need to do a better job of getting documented commission approval using our request for emergency procurement and our budget adjustment request forms. Now, I know we're still using those emergency procurement forms, and they come to commission and they'll approve an emergency use. Mainly, you'll see it in building ops, having to do something with like a roof leak or broken equipment that needs to be replaced. Those are supposed to be coming to the budget office. Things have gotten lax over the years and we're not seeing them, but we're going to start keeping track of them again. And then there's another form that's been out there for years and we've kind of gotten away from using that too, and that's the budget adjustment request form. And that's for things that aren't a procurement related issue. It's just, we've got to spend here and we have room here. Let's make it happen. So we're going to put both of those forms onto the budget webpage so that they're available. And we'll start keeping track using those forms of documentation. And we'll use that in our monitoring that we bring to the huddles every month so that we can track where we are and how much we've used contingency balances. It is possible for us to quickly use all of our contingency funds, and that's going to be one of the concerns that why we monitor it so commission can make informed decisions. Here's a real life example. Typically, you would see these real life examples happening with building ops, like a roof leak or something like this. However, we just had a thing happen that became effective January 1st. However, we did not know about the change in law, but it allows 911 operators to transfer from the general division of loggers to the police division for loggers. Now, even though 911 is operated on a daily basis by the city of Springfield, all of those operations come out of our 204 fund, the special tax that we have, and the budget is controlled by commission. So they would like to do this, but they've got a lump sum payment estimate of $889,000 for what that cost to convert would be. The fund has a cash balance that can absorb that. So cash is not the issue here. The issue here is budget. It wasn't budgeted in the 2023 budget. So what we're looking at is a use of contingency in this first 10 months of the year. So I said earlier that 911 has contingency. We put it in there just in case because they have ample funds and something might happen to their equipment or something where we need emergency procurement. But we only have a $350 balance in that contingency. So this would mean if commission approves this, then they would have to authorize the use of $539,854 of our GR contingency for this purpose. So our GR contingency is only $2,625,000. So if they were to authorize that this month, because this is when this issue is raised, that's 21% of our contingency. So that only leaves us a little over $2 million for any kind of unplanned emergencies that might happen in the first 10 months. So even though they have the cash, commission's going to have to weigh, are we going to have any more unplanned emergencies? Do we need to save more than $2 million in contingency? So this is where this becomes important, to where we don't want to have an account appropriation level that's causing us to use a lot of contingency spending. So instead of having it down at the account level where every time we turn around, we're dipping into contingency for a little small purchase here, a small purchase here, we need to raise it up. But in this example, commission just has to know, well, is 1/5 of our contingency going to be used in the first month of the year, giving us only $2 million for any emergencies that might happen to a building or equipment or anything else until we get to November. Or are we going to make that budget department put together something and say we've found some revenue? So that's kind of a real life example and something that when we look at this, commission's going to have to weigh what happens. So the benefit of monitoring, as you can see, commission has to weigh every decision about the use of contingency against a possible more urgent use. It's imperative that we monitor not only the impact of our decisions already authorized, but what we do in the financial huddles. We look at the pace of spending and we collect explanations on that pace of spending and whether you're going to end up remaining in budget, or if this is something like we had last time. Angie was pointing out to us about fuel. You know, we had a change in fuel prices from when the budget happened. So we started knowing that we were going over on fuel. Or, you know, something where cost of utilities was a lot more than what we budgeted because utility costs has gone up. Or we have insurance come in and insurance ends up costing more than what we budgeted. You know, we budget a 6% increase for insurance and insurance comes in at 10%. So that's why we monitor these things in the financial huddles and we look at pace so that if we have something that's kind of spending ahead of pace, we can ask departments and offices, well, is this something that's going to be corrected by the end of the year? Or is this something that we need to go ahead and take to commission and weigh using contingency to be able to cover this? Well, we're going to be forced to cover some things. So it's good to know that that use is going to be needed so that we can know what's really going to be left out of our contingency balances. So as we monitor this stuff and we look at it as a group, we're going to discover, you know, better ways to budget and plan for contingencies and future use in general. So that's really kind of what I wanted to present today. Obviously, the fourth Tuesday in February is another financial huddle. We don't really get to where we're looking at our numbers for 2023 until we get a couple months behind us. So next month, I'd like to kind of do an update on where we are in defining the appropriation account level of budget, and then kind of preview how we would revise our monitoring system, whether it's what we used last year or how we're going to put that together. And we might actually put together the appropriation level of budgets that people would have within some sort of level compared to how it shows in the budget book. And then we'll also review those requests for emergency procurement and the request for budget adjustment forms. And I see Timmy's in the audience. So we've already thanked him privately, but I'd like to for reworking the request for budget adjustment form to where it's going to be a fillable PDF form. So thank you, Tim. Appreciate it. And that's really what I got for you today. I don't know where we are on time. Probably doing pretty good. Well, okay, 2 minutes is still pretty good. If there's any questions, we'll just forego those and let you guys call it good. Thanks, everybody.